is it good to pursue in investing in index fund instead of different classes of small, medium, and large cap? Because tracking is easy and no mistakes and doesn't take care of an asset manager who may or may not good.
Okay, again, my personal view here that, see, if you look at, so I will give you a very simple example. Let's take the case of the top 500 companies of the country, which is say represented by the 500 index, BSE 500 index. So these are top 500 companies. Now, if somebody would have invested a lakh of rupee 10 years back, the value of this 1 lakh rupee would have been roughly about 2.6 lakhs. So this is a return of about 10% per annum, not a bad return. But if I have been a fund manager, I would have selected the top 50 companies out of the 500 and invested the lakh of rupee there. My 1 lakh would have become 12 lakhs, a return of 28% per annum. So clearly in India, the story is in favor of active fund management. When I say active, fund managers picking the companies, investing in them. Index is good, I get market returns. But one has to be also wary of the fact that not all companies perform. Okay, so when all companies don't perform, some of the bad performance companies will also impact my returns, which is what I told you in the form of the data. 1 lakh becoming 2.6, 1 lakh becoming 12 lakhs. Now the bet is, where am I convinced? Okay, am I happy with our 10% returns, which is not bad because it is anyways much better than FD returns. But why do you come to mutual funds? Because you want to have better returns than 10%. Because that's why you give the money to a fund manager. And history strongly suggests that fund managers have been able to generate reasonably good amount of alpha, which is over performance as compared to the index itself. The challenge could be in a few of the large cap sectors or the large cap funds, where perhaps you would not have seen too much of alpha being generated. Because please understand, a large cap segment is a more mature segment as compared to a mid or a small cap segment. So alpha generation in a mid or a small is much easier, but the challenge is to pick the right business, and that is where you need a fund manager to do it. In a large cap, because of the maturity of the market itself, sometimes it becomes difficult to generate that alpha. But again, we have seen a lot of funds have been able to generate consistently good alpha even in a large cap space. So I am in favor clearly of active. Again, from a diversification perspective, maybe I will suggest 90% active, 10% index, so that you have a mix of both of them. So that suits your requirement as well. Pure index, I don't think we are in a stage now where you will be happy as an investor with pure index.